So when we were looking at the uh, independent sponsor surveys and alike, the first one was typical EBITDAs for companies. What are the typical acquisition EBITDA multiples over the last year? Um, so as I pull up that slide, the let's see what we got here. Yeah. So the independent sponsor survey, this was a collection of our internal clients, in addition to those who responded to the survey, about you know typical EBITDAs for companies invested in or targeted by firms, sponsors, etc. Um, and in large part, independent sponsors continue to dominate the lower middle market in 2025. You'll see that 79% of sponsors target businesses with 2 million to 5 million of EBITDA, and 64% of the target businesses were with 5 to 10 million of EBITDA. If you see on the highlights below, typical acquisition EBITDA multiples closed in 24 compared to 25 were 64% between 4 and 6 times compared to 54%. Um, you'll see that valuations, which closed year over year, actually increased of EBITDAs less than 4 times, which signals a reduction in some of these loftier valuations year over year. This sort of jives with what we see in our day-to-day deals and our practice. So I'm not surprised by that. Um, what also was interesting was a slight shift in loftier valuations. So from 31 to 37%, which is between 6 and 8 times earnings. But most importantly, the 4 to 6 times valuations remains the most common range, but there was a decline in this year over year. So where do we go from here? Based on some predictions, there's continuing to be a stronger move towards valuation declines and pressure on the market. With that being said, the independent sponsor market is as active as I've seen it, in the last 5 years. So that is very much TBD. So key trends, which is largely talked about, is the demand for AI capabilities. AI is a hot button topic. You hardly can get away from this, even if you want to look. The M&A landscape as a whole is shifting with some of the impacts of AI. Independent sponsors are leveraging AI for outreach, etc., and there's continuing to be pressure and an appetite for AI type businesses. So if you're seeing AI deals, market shifts to AI, I'd love to hear, from you and some of the chat of what you're seeing. If you're using AI, if you're an independent sponsor in your deal search, I'd love to hear from you in the chat as well of what is working. AI may not be, the front and center for some of these businesses, sponsors, fundless sponsors, and independent sponsors are looking towards. But it is a hot button topic. Um, so it's worth a conversation, especially, when we have an audience. Uh, so despite lower deal volumes, total M&A value is continuing to climb, driven by a lot of mega deals, strategic investments in technology, consolidation in the market. We're also seeing JP Morgan was quoted with a positive outlook for 2026, driven by less regulatory issues and the big continued decline in interest rates. Whether that comes to fruition or not is still a TBD. Um, those who are thinking strategically and acting boldly will set the course for what comes next. Goldman Sachs was quoted with saying that piece. And in large part, 2026 is expected to be a very strong year for deal making. BCG's 2026 outlook highlights a strong rebound with global deal value reaching around 3 trillion in 25, signaling, renewed momentum into 2026. However, they noted the market is shifting towards fewer but larger and more strategic deals. Again, the shift to um, the return of mega deals, which isn't as valuable to independent sponsors, but it is important to note. I often see a trickle down effect of if more mega deals are getting penciled and closing. In general, it's a healthier M&A market. Um, This is a report from Axial about the 2025, some more survey responses about what they've seen based on the responses. A couple of things I wanted to call out, which was very interesting, was um, really which sectors sponsors are targeting. So if you see in the upper left-hand corner, um, independent sponsors are targeting businesses and industrials and business services. So while the rush and the conversation is largely around AI, traditional companies in the industrials and business services are still a primary emphasis for independent sponsors. The quote unquote boring businesses, AI resistant, et cetera, still continues to be uh, the most popular target spot. Uh, so sponsors are using a mix of sourcing channels, such as outreach to intermediaries, buy-side advisors, sell-side advisors, etc. So the search still is a mixed bag of how independent sponsors are leveraging outreach. When asked, what size of transactions is the sponsor focusing on, the large majority of them were deals with total enterprise value of 10 to 20 million and then 20 to 50 million, largely 63 to 66%. Um, and then the average multiple paid for some of the investments completed in 2025 uh, is in line with what we touched upon earlier. Deals in the 4, 5, and 6 is largely the average multiple paid. You'll see that 20% were less than 4 times earnings, but nearly 60% was in that 4 times or 5 times bucket. If you want to scan the following QR code, you'll receive a copy of my Business Buyer's Toolkit. If you're an independent sponsor, it contains things like um, a financial diligence data checklist, um, how to chart out your number of days to closing. If you have a 90-day LOI, it'll include an organizational chart, a project map, etc. I use this on all of our deals. Feel free to scan the QR code, and you should receive a copy of that in your inbox today. If we would like to come back to it, feel free to put that in the chat. But I'm going to keep this moving. So, global M&A activity in 2025. Um, if you see on the chart, deal value and volume picked up a little bit from 24 or from 2022 to 2025, but the deal values in, this COVID era of 21 were still very much not even close to the volume and deal values. It's very much looking like a one-time event in the M&A history, at least in the past 25 years. Deal values have picked up from 24 to 25, and that is kind of in line with some of the more activity. Global M&A activity increased 43% in 25. Um, you'll see that it is short of 21, 22, 23, 24 on the left. Um, so, where do we go from here? I would expect 26 to be in line with 25 and slightly above it based on what we're already seeing through the first quarter of the year. But time will tell. The number of the number and share of large deals in M&A increased in 25. So you'll see in the Americas, Europe, and Asia, there was a large increase in number of deals, the share of large deals, and um, the percentage. Regionally, the Americas dominated the large deal activity around 70%, while Asia Pacific and Europe lagged behind. Overall, the data reinforces that the market is concentrating around fewer, larger, and more strategically significant deals in the grand scheme of the M&A space. So double clicking on North America specifically, you'll see if we zoom in, um, the number of transactions and the value picked up significantly from 24 to 25. This is driven largely by higher deal volumes, the return of some mega deals, etc. Um, but you'll still see that compared to 16, 17, we're beginning to return to a more stable and level deal volume of transactions and the value sizes. Where we go from here with the ever increasing of AI and the valuations in I would expect some values of total transactions to perhaps increase significantly in 26 and more importantly in 27, just as I do see some consolidation in that market. So what are some of the top targeted sectors, by quarter, and then how did activity look quarter over quarter? So you'll see 25 was driven by technology, healthcare, utilities, and energy. Uh, It's predicted the return of technology in 26, based on what we've seen in Q1. I would say that utilities and energy, O&G, and healthcare um, are still very strong, and I don't expect technology to be as heavy as the chart on right, but we will see. There's still a lot of deal. There's still a lot of time left in 26. I think 27 may be where we see more technology consolidation, um, especially at the mega deals. So the this also continues to emphasize volume. So you'll see that in uh, February of 25, deal volume is relatively on track or a little bit ahead of where we are at in 26. So that was an interesting statistic. Uh, in January, January 26 came in a little bit higher than 25 year over year. Um, and it's largely in part by some of the consolidating we're seeing in the market. So we will see where we go from here. I do think that March, April, and May of 26 will be higher than what was in 25 based on the activity we're seeing. So here's the US sector breakdown for top deals. So you'll see that in uh, 2026, technology had significant percentage increases, 65% compared to the year before. Um, Life sciences slightly behind year over year, and aerospace and defense. So I sit in the Washington, D.C. metro area. We do a lot of A&D and government contracting work. Uh, this is no surprise. Based on the volume we're seeing and the deals coming under contract and LOI each week, which we're doing Q of E's for, I would say the return of aerospace and defense and government contracting is only going to continue going forward. Um, as a lot of independent sponsors, private equity are mandated to deploy capital in a lot of these areas, which um, they deem very predictable based on the government style and the contract nature of a lot of these businesses. O&G remained relatively flat year over year. Um, I expect powers and utility to pick back up through the remainder of the year. I think the percent change in value January of 26 to January of 25 hopefully is just a blip, but we will see. Sector by activity. So these are the deal counts based on some of the surveys we were able to gather from February of this year compared to the prior year. You'll see that technology services is broad, but you would think technology services could be B2B services in, deemed technology, AI, cloud, and high quality software assets. Commercial services saw a uptick. Health services saw an uptick as well. Um, Other than that, was relatively flat by sector by activity. I think consumer non-durables continues to increase, as well as things around distribution services, consumer services, I think that picks back up in the later half of 26 due to some of the things we're seeing in the market. Um, Power and utilities, I also think will pick up. So some of the sector highlights we just touched upon, the aerospace and defense in particular, I think that continues to grow and remain very strong throughout the rest of this year as the return of um, the political environment. We're past the Doge impacts of some of the contract cancellations, um, which definitely stalled some of these government contracting businesses. Now that there's clarity around some of the political concerns around this, I would expect this to remain very strong over the next 12, 24, and even 36 months. So as we kind of close out the based on some of our survey results, it's expected that 41% of CEOs, business owners plan to undertake a major acquisition within the next 3 years. And this is largely due to the growth by acquisition mindset. So, if you are an independent sponsor, a business owner, you may look to add on and conduct a strategic acquisition in order to grow your business rather than organic growth. Um, those are some of the things I'm seeing in the market right now as the return for more strategic buyers come into our pipeline, but time will tell. Some of the takeaways, continuing to leverage AI and look in areas of the market that may not be as interesting or talked about in media is where a lot of the sponsors we work with are finding success, especially those who are searching. Um, Leveraging AI for outreach, et cetera, can be helpful, but sticking to traditional businesses may be less competitive as sponsors and PE begin to move downstream in order to continue funneling their deal pipeline. Uh, If you have a deal that's under LOI or your sponsor who is looking at something and expected to go under contract, uh, I would certainly love to meet with you and see if you have a need for a quality of earnings, et cetera.